Hi, this is Chris Smith from TheOptionClub.com. Thanks for watching this video. Uh, in this video, I'm going to demonstrate a fairly straightforward adjustment strategy that a stock investor or a covered call investor might choose to use in the event their stock sells off to a lower price, leaving them holding the stock at a loss. For purposes of this demonstration, we're going to take a look at McDonald's Corporation using some software called OptionView, which allows us to model the option strategy. It also allows us to use historical data, which makes the presentation a little bit easier to put together. But we're looking at McDonald's, blue chip stock, fairly common holding in many investment portfolios, and we're looking at a date of Friday, July 22nd. 10 o'clock in the morning, that would be Pacific time because I am on the West Coast. And we'll click the stock chart button, and what we see is a nice bullish trend in McDonald's coming off of a rather lengthy base. And it looks like a nice bullish candidate, and it's just gapped higher. So we're going to assume that we're bullish on the stock, that we want to own 100 shares, and we're going to sell an at-the-money call option and see what happens. To do that, all I'm going to do is type in 100 up here in the box, which indicates 100 shares, and we're going to sell a 90 strike call option, which is the at-the-money call option. And we can click on the Analyze button, and we'll zoom in a little bit to get a better view of this position. And what we can see is that we stand to make about $160 maximum profit on the trade. We have a little bit of room to the downside, but we're pretty comfortable holding this stock because it is McDonald's after all, and we believe that it will increase in value as time goes on. So I'm going to go ahead and convert trades, which essentially executes that transaction in the software's database. And then we can move forward a few days. Now we're going to jump forward, not a lot, but we're going to move forward to August 2nd, 2011. And we're going to see how this trade is working out so far. And what we see down here is that we do have a loss. And we're going to look at the price chart again, and we can see that we filled the gap. McDonald's has traded consistently lower, and now we have some concerns, because we don't know if this trend is going to continue. We have a loss now in the stock. We're not ready to sell the stock because it is a long-term holding, but we would like to make some of our money back if possible. So the first thing that we're going to do is we're going to take a look back at the chart, or at the risk graph here, and what we can see is that we've now moved down sufficiently. And if you are familiar with a normal distribution, these two multicolored lines down here, this purple one is a 1 standard deviation move, which means that 68% of the time the stock is going to exist within this price range between $82.23 and about $88 on the upside. And to move beyond that, you would have to exceed 1 standard deviation. That essentially translates into now a fairly low probability of profit between now and the expiration of our August option. So we're now in a position that's a little bit underwater. We're losing $270. We have a fairly low probability of seeing a profit on this trade, at least between now and the front month expiration. So what we're going to take a look at doing is adjusting this trade. And the first thing we see is that the option we sold is only worth 13 cents. So it doesn't make much sense for us to hold on to this position. We could roll to a lower strike in the same month, or we could move out to September. What we're going to do for purposes of this trade is we're going to move out to September, which is not an unusual adjustment to make because we only have 46 days. We'd be rolling within a couple weeks anyways. So we're going to go ahead and repurchase that call option, and then we're going to roll out to the at-the-money 85 call. But we're not going to just sell one. We're going to sell actually 2 calls. And then we're going to buy one 82.50 call. Now, these 2 calls are fully covered. The first one is covered by the 100 shares of stock, and then we also have a call option that we've just purchased to add some additional bullish momentum if McDonald's recovers. Now, that call option costs $4, but we've sold 2 options at the 85 strike for a total of $4.48. Okay, because the price is $2.24 per option, and we're selling 2 of them. Now, before we do this, let's just take a look at the simple roll to the at-the-money strike. And we're going to basically close out our short call, and we're going to roll out to September, and we're going to roll down to the at-the-money strike. The problem with this is that even though we've moved the risk graph lower on the price line, we now have no probability of profit. We have a 0% probability of profit because we can no longer make any money in December on this trade. We can get pretty close to break even, but we cannot actually break above the 0 line. Now, some people might be comfortable with this and be willing to buy their time, but I want to actually create a profit potential. So the way we're going to do that, like we showed before, is we're going to still close out this call option. We're going to sell 2 of the 85 calls, and we're going to buy one 82.50. And we're going to go ahead and hit the Analyze button again. And what we've done here is we've created a slight profit potential now. Now we have a 61% probability of profit. To put this in another frame of reference, if we have a 61% probability of profit, we have a 49% probability of not earning a profit. We could also say that it is more likely than not that we will earn a profit on this trade. Now, there is no guarantee whenever we talk about investing or trading, but we have at least put ourselves in a position where we do not need significant upward price movement from McDonald's, and we can still get ourselves above the 0 line. We can recoup our losses within the next month and still have the potential to make some money on this trade. I hope this was helpful. This is the stock repair strategy, and if you would like to learn more, please do consider joining us in the Option Club's trading room.